Ladies and gentlemen, I'm Sarah Lowther, and a warm welcome to today's Master Investor and Small Cap Network webinar, which is showcasing the Aquis Stock Exchange. Now, this exchange makes a point of showcasing and championing entrepreneurship, investment, and growth. Now, the proof in the pudding is that many Aquis residents are nominees for this year's Small Cap Awards. Now, over the next 20 minutes, 90 minutes, in fact, you'll get an overview of Aquis and get to hear from and interact with the nominees for the Aquis Award. Now, this is an interactive webinar, so if you have any questions you'd like to ask to the presenters, put them in the chat and the Q&A feature, and we'll endeavour to get through as many as possible. So to our very first guest now, and it is Sara-Louise Porter, Director and Co-Head of Business Development at the Aquis Stock Exchange. She has assisted several hundred dynamic businesses to navigate the sometimes complex requirements of a primary market and capital markets journey. She simplifies complexity. Over to you, Sarah.
Thank you. Good afternoon, everyone. Can you hear me okay, Sarah?
I can do, yes.
Excellent. Well, I'm delighted to be supporting the Aquis Focus Leading Lights webinar this afternoon. Thank you to Tim and all the team at the Master Investor Company and for organising this event, and also to Sarah for kindly hosting us today. Tim, could you move to the next slide, please? I thought I would start by giving you a quick introduction to Aquis Exchange PLC and then go into a bit more detail on Aquis Stock Exchange, which is the reason for being here today. So Aquis Exchange is a challenger exchange with a mission to create better markets for a modern economy. And we do this in a number of ways through Aquis Markets, the original business of Aquis Exchange, launched in 2013, and is a trading platform operating lit and dark order books, periodic auctions, and a closing auction alternative. It covers 16 European markets, allowing institutions to trade over 6,000 UK, Swiss, and EU stocks. And it is the 7th largest equities exchange in Europe by value traded. Then we have Aquis Technologies, our software and technology division, which creates and licenses cutting-edge exchange infrastructure technology and services, including matching engine, surveillance, and regulatory reporting solutions, and is working with emerging exchanges and financial institutions across the globe. So finally, we have Aquis Stock Exchange, or AQSE, as we like to call it, a stock market providing primary and secondary markets for equity and debt products. Excuse the siren going off if you can hear that. We also have a data division as an increasingly important revenue line for our business, and all divisions are growing and are profitable. Next slide, please, Tim. So a few facts about AQSE exchanges in the UK. As the newest market to be created, we're just over 4 years old now. We have been designed from our own experience of going public, and in particular as a fast-growing business ourselves. So we've been designed with small and medium companies in mind. As previously mentioned, we offer a home to both equity and debt products, and the full range of tax incentives are available. We do also have a tax guide available if anyone would like me to send that to them. Importantly as well to mention, shares can be included in your SIPs and ISAs. And we really do believe that we are shaking up traditional capital markets and transforming them to better serve the growth companies of the future. Next slide, please, Tim. So a few things to be proud of. So we attracted more new admissions to our market than any other UK growth market for the last 2 years in a row. A very significant milestone for us. And we uniquely offer two routes to our growth market. So we can attract a much wider range of businesses, and we can then nurture them through launch and ongoing capital market support to achieve their ambitions. Our trading levels have increased through improved connectivity, and we now have a wide range of sectors and sizes of business on our market. And those businesses have been attracted through our efficient and straightforward admission process, and also the fact that they have a direct exchange relationship with us. Importantly, very importantly, over 450 million has now been raised in primary fundraisings and further funding rounds since our acquisition in 2020. Next slide, please, Tim. Just a quick view of the landscape, the capital markets landscape, and here you can clearly see since the acquisition in 2020 the landscape is changing in our favour, and our portion of the pie is getting bigger, which is just the way we like it. Next slide, please. So what are the key advantages of Aquis Stock Exchange, and why do companies choose our market over other markets? Well, as I've mentioned, Aquis offers the most efficient and straightforward admission process, which saves companies time and therefore cost. And we have tried to remove as much as we can of the unnecessary regulatory burden whilst keeping high standards for investor protection. We really get to know our companies, and we support our companies from pre-admission to ongoing help on how to engage with all stakeholders. We make ourselves available, and we take each company on a case-by-case basis. We are open to new frontier sectors, and we support growth through acquisition too. Next slide, please. So just a quick view on the two routes to market that I mentioned earlier. This is a unique process to us. We have AQSE and Apex. We don't believe a one-size-fits-all approach works, and so we created AQSE for earlier stage growth companies under 10 million market cap, and Apex for more established businesses where we have built in more requirements like compliance with a recognised corporate governance code and a bigger free float to enable more trading to take place. Next slide, please. So finally, I would like to shine a light on my fellow speakers this afternoon. Equipmake Holdings, Incanthera, One Health Group, Sheperd, Neame, SulNOx, as well as EDX, who couldn't make it today, unfortunately, all been nominated and reached the finalist list for Aquis Company of the Years at the forthcoming Small Cap Awards. They have all demonstrated incredible resilience, continuing to push innovation and making progress despite difficult conditions that we face at the moment. Many of them have raised capital at the moment, as you can see on the slide. We've celebrated Equipmake's recent fundraising, Incanthera's very recent fundraising, and good performance all round from the companies that you are going to hear from next. We are very proud to have them on our market, and I'm not going to take too much more of your time because I'm sure that you want to listen to them. So that's me done. Thank you for listening.
Thank you very much indeed, Sara. So that is fascinating. So Aquis is exceptionally nurturing, and some of the narrative that we've been hearing in the city this year is that there's been a flight to delist, that the capital markets aren't working. We're hearing of a lot of companies delisting from AIM and the mid-caps, FTSE mid-caps, but it sounds as though this is not what is happening, and it's not what you're experiencing at Aquis at all.
I think it is challenging out there for sure, but I think because we are able to offer a much more flexible route to market, we have the two channels open so that we can be attractive to a wider number of companies. And we really feel that if we can, help engage with companies at an earlier stage, then they can learn the ropes on AQSE, progress to Apex, where they'll find further funding, institutional support, more liquidity, and that's the public markets working as we want them to work.
So we've got a question from Bruce. A question I wasn't expecting. I'm not sure if we can answer this, but can you please explain how a retail investor can trade Swiss stocks on Aquis? Is this a possibility?
Well, they would be able to do that through telephone broking. And I know that IG particularly are pushing out the jurisdictions that they can provide their online service to. So we could check that as well. In terms of online platforms, we have Hargreaves, IG, Interactive Investor, AJ Bell. I probably missed one out, but pretty much all the major platforms covered. They do all have their own criteria to including companies on their platform that's not in our control, unfortunately, and that's the same for all markets. It can depend on size and free float and the number of market makers, but we are trying to, improve that landscape and make it as easy as possible. So certainly through telephone, but I'd have to check in terms of online.
So here's a gift for you. Some investors complain that many Aquis stocks are illiquid and it's difficult to find data on the shares traded on the exchange. Is that a fair analysis?
So I guess I would hope not, and I would hope that the companies that are speaking today can bear testament to the fact that they see very regular trading and they don't have issues for their investors. As I've said, we are well connected now. That's a big change that we've put through over the last couple of years. We provide our data to all the major data sources like Bloomberg, ICE, Refinitiv. All the major data providers are taking our data and should be displaying it. Our own website is a great source of information, so always check there first. We have live prices. And I think once upon a time, it was quite difficult, and now hopefully it's much, much easier.
And now onwards to the future. Thank you very much indeed, Sara-Louise Porter, who is Director and Head of Business Development at the Aquis Stock Exchange, or AQSE. Thank you very much indeed.
Thank you,
Sarah. Okay, so on to our first company. And this next company has had a taste of award success already, winning Best Partnership Pub Company. It is Sheperd Neame, Britain's oldest brewer and the name behind Spitfire, which of course is very relevant this week. Jonathan Neame is the Chief Executive and he joins us now. A warm welcome, Jonathan.
Thank you. Good morning. And thank you for the opportunity to present our company. I've got a few slides here and I will run through them fairly quickly. Hopefully the name of the company, or at least some of our beers, are reasonably well known to some of the people on this call. But if we can move to the next slide. We are an independent business with a strong family involvement. We've got about 50% family interest, 50% private retail investors or small investors through the Aquis Exchange. We are an ancient company with a unique heritage. One of only 20 companies that are founded pre-1700. Our origins go back to 1147, but this is not a history lesson. The reason for mentioning this is that the reason we survive is that we are actually very good at adapting to change. And this has been a period of immense change in the market. We can go on to the next slide, please. Just a quick snapshot of our numbers. Prior to the pandemic, we had grown our net assets per share and our dividend per share every year, year on year, for 50 years. And that was a trajectory that we felt comfortable that we could continue to do, never knocking the lights out, but always showing great resilience and, as I say, adapting to change. Of course, the pandemic interrupted all that. We had to stop the dividend and we took a hit on our net assets. In fact, we lost 37 million in that period. But we're now back, which I think shows the resilience of the sector. As you saw in the previous slide, if we can go on to the next slide, as you heard in Sara's presentation, we declared last year record revenues of 166 million. So the demand for the British pub, the demand for beer remains fairly resilient and robust in the UK. Our position remains strong, though our margins have not yet recovered to where they were back in 2019. Still making a healthy profit, 13.3 million. Our year end ends in a few weeks from now. Our cash flow is very strong. Our asset base remains very strong. But of course, our battle now is to overcome some of the inflationary problems that we've had in cost of goods, energy, and of course, labour. Next slide, please. Our brand portfolio is listed out there. Spitfire has been mentioned. Other beers, such as Bishop's Finger, Whitstable Bay, are in the more conventional core ale or core lager category, but we have a whole range of specialty beers that are edging towards the more fuller flavour, greater taste of craft and small batch. This is what you're seeing in other parts of the market, and it's where there's a great opportunity in the future. We also do very well with partnerships, and we brew Singer from Thailand, which gives us the opportunity to give a great brand platform at things like the Open Golf, or indeed to get access to some very premium hotel or restaurant accounts. Next slide, please. The base of our assets is freehold property. We own 296 pubs, 85% of them are freehold, about 43 are in central London. The balance is towards tenanted pubs where we own the freehold, but the licensees are independent business people paying us rent and buying drinks products from us. We have a very stable estate, very high quality estate. If you compared the profile of our pubs with anybody else in the market, we would compare very, very strongly. A range of community pubs through to wonderful coastal hotels and some great town centre or city centre locations. Next slide, please. Our business model is, we have three different divisions. Tenanted is the asset backbone, the cash backbone. Retail is where the growth is, it's where the investment is, it's where we employ the most number of people, and it's where we invest most of our capital. Brewing and brands is our differentiator, it's our DNA, it's where our pubs can find their difference. It's a tough market in terms of profitability, but it is where the company's identity is created. Next slide, please. In terms of our strategy, very simply, whatever our touch points, we want to recruit new customers to our pubs, to our beers, online, to our visitor centre, wherever it might be. We want to give them a great experience. To do that, we need a great team of people. So there's a huge people process that sits behind our business. We have 1,700 people we employ directly, 5,000 indirectly. All of them need to know about our beers, need to know about our food, our culture, our DNA, and need to be able to give a strong service to the customer. If we get all that right, we create passionate advocates for our beer and our pubs. And if you're a long-established business that wishes to be around for a long time, then it's important you keep putting something back to your customer base, reinvesting in it, and rewarding them for their loyalty. Next slide, please. Aside from our basic strategy, we have some unique long-term drivers for growth, and that's to do with our geography. We operate in Kent mainly, but also both Sussexes, Surrey and Essex. There's 5 million people in that environment, and the predictions is that another 500,000 population will come there by 2035. The main reason for that is increased connectivity. We've got the high-speed one through Kent. We've got a huge economic development hotspot around Ebbsfleet. We've got Lower Thames Crossing coming and other connectivity. And that's before you talk about London. So within our heartland, we've already got a very strong pub position. We've got a dominant position in individual communities. And as we see population growth, we will also see growing demand for premium experiences and growing demand for authentic brands with local provenance. We think this plays to our strengths. Next slide, please. So our opportunity is to be the leading premium hospitality business in the Southeast. It's to be the leading traditional vertically integrated brewer. Many companies have split their brewing and their pubs. We still believe that that vertically integrated model is the best, and to be an authentic family-controlled British icon brand. Next slide, please. To do this, we need to win in Heartland. That means not only owning the best pubs, but it's also targeting the Heartland hero accounts in all those micro communities within that Southeast, partnering with the best cricket teams, the best football teams, the best rugby teams, or supplying the best free houses. We already have a very strong position. We then support that with sponsorships, as I've mentioned. Next slide. We excel in service. We direct deliver to anywhere on a 2-hour drive time. We have a really excellent partnership with a company called GXO, and compared to our competitors, we always out deliver them or out service them. We also have very strong personal relationships. These are the strengths in our business. Next slide, please. Over the next few years, we're going to see a modernization of our brewery to ensure that we keep up with all the different trends, drive freshness, drive quality, drive taste, drive flavor. Beer consumption, alcohol consumption will drop. We get that, but it doesn't mean that people will not still have a craving for a great beer. Next slide, please. And sorry, I think we missed one there. But to do that, we need to adapt to new and emerging trends to be able to produce the best low and no alcohol beer or specialty beers with such as hazy IPAs we've got here. So we've got the capability to do it. We will be investing in our plant, but we're firmly committed to brewing to enable us to adapt to those changes. Next slide. Ethical sourcing and supply chain resilience is also fundamental, not only to the consumer, but to our sector. We already have got some fantastic metrics about where we source our utilities, etc., from, and our recycling. 80% of our hops are purchased from within 10 miles of the brewery as it is. But conveying that message and our food sourcing message to our consumers is also very important today and will become more and more important in the future. Next slide, please. So if we just bounce through these slides very quickly, our whole focus in our pubs is to elevate our own beer, make sure that our beers are centre of the bar, that our team members are passionate advocates and know how to dispense them in the best condition. Next slide. We have a huge food development team trying to attract new audiences, finding new occasions, developing at the moment things like sharing menus, more menus for kids, but making sure that all those hero dishes like the Great Sunday Lunch is a key part of what we do. Next slide, please. Across our whole business, we have about 500 different letting rooms, about 250 directly controlled in our managed houses, and they are all high quality. We can always make that experience better by giving them great design, and throughout all of our pub estate, we're always looking to enhance the environment of our unique and characterful pubs by using design. All of that will add to the overall pub and hospitality experience. Next slide. And then we finally do a lot of outdoor events. Again, this gets our brand into new audiences, creates an experience where people can enjoy the brand in a different place from going to the pub or going to the supermarket. So we partner with a number of music venues or one-off occasional events. Next slide. So finally, in summary, I think our overall business is about driving a great hospitality experience. Our pubs offer that. There's a long way to go, great investment opportunities that we've got. Our beer is our differentiator. Our brewery is our brand home and is unique. And our team creates those passionate advocates. The business model that we've got has virtually unchanged over the last few hundred years. but it's the change within that business model that is the thing that makes the difference. And although there's some negative trends in terms of alcohol consumption and going out at this moment in time because of the cost of living crisis, we personally are very optimistic about our prospects in a smaller market going forward as a premium brand. Thank you.
Thank you, Jonathan. Now, I'm supposed to be objective here, but I am a camera card carrier. I do love my beer, and you've missed out the shareholder perks. There's some shareholder perks, isn't there, if people invest in your company?
Yes, there are. You get 3 different grades of shareholder card, each giving great discounts on food, accommodation, and staying in our pubs at weekends. And of course, if you're signed up to that, then we periodically do one-off promotions as well around New Year breaks, Valentine's, weekend breaks, etc., etc. So hopefully when you get involved in our company, people can see that there's a great way to connect with us in many different ways.
Absolutely. And great flavored beers as well. Now, what should any government be doing to support the brewing, pub, hospitality sector, bearing in mind we've got an election July the 4th?
Wow. How long have you got? Not long, I'm sure. But one of the problems the sector faces is that it is chronically overtaxed compared with any other hospitality sector in the world or beer production sector. We pay 7 times more alcohol duty on beer than Germany or France, for example. So it's chronically overtaxed. And now we're on a ticket to move the national living wage up very significantly. So we've moved from a sort of American level of light regulation, flexible labor market, relatively low national living wage, and we're moving to the top of the pile at Germany or France levels in a very short period of time. Now that is a problem because that's inflationary. We have no option but to pass it on. And some of the proposals coming forward to change the labor market are quite concerning. We still don't know the full details, but our sector relies on employee flexibility, and it looks like the oxygen of flexibility is being sucked away. Now, the flip side to that is that our sector wants stability in terms of its employees. It's had too much turnover of staff, and we're all furiously trying to change our business models in the sector so that we employ people for the long term. And everybody quotes in France and Germany that people join a pub, a hotel, a restaurant, and they stay there for many years. That clearly is the future. To do that, we need a great training program, apprenticeships, etc., etc., and that's what we're investing in.
Okay, so we just have 1 minute. Phil's come in right at the last minute. You have the low alcohol naughty beer with the zero alcohol market, very buoyant right now. Do you plan to capture more of this burgeoning market?
The market is buoyant, but it's also tiny. It's way less than 1%. Some people suggest that it's going to grow to 10%. Others are skeptical about that. Yes, we do intend to grow more of that. Yes, we will develop more beers in that space. And I think it will grow. But I think alcohol will still be one of the dominant reasons for visiting the pub, albeit that occasion is likely to be at the back end of the week.
Jonathan Neame, thank you very much indeed. So many questions, so many drinks to be shared. Another time. Thank you very much indeed. Thank you.
Thank you.
Great shareholder perk there. Okay, so next company now, and it is Equipmake. It's an Aquis Showcase winner, another award winner. It's an engineering specialist pioneering the development and production of electrification products across the automotive, aerospace, bus and coach industries. Think zero emission drivetrains. It's led by founder and its chief executive, Ian Foley. Ian.
Hi, and thank you very much for the opportunity to present to you today. Yes, if we could go on to the first slide, please. So as was said here at Equipmake, so we design and manufacture all of the key technologies required for the electrification of transport. We operate in multiple sectors, and we have leading positions in a number of those, and I'll explain that in a short while. But our main focus is in the heavy duty sector. We have a number of global leading customers, which is growing. We're currently 120 people. We listed on Aquis just under 2 years ago, and we've hit a number of key milestones since then. Next slide, please. So a key element of our offering is that we are vertically integrated. So what does that mean? We design and manufacture the components, but we also integrate them into complete drivetrains. And particularly for our sector, our key sectors at the moment, being the heavy commercial vehicle sector, that has given us the opportunity to win global customers, because the market at the moment in commercial vehicles isn't big enough for them to invest heavily themselves, but it's huge for us. So it's a real sweet spot, and the ability to design and manufacture the components and integrate them is key. We only have to make a margin once. Our competitors who are buying in components and integrating them have to make a margin on expensive components. So it gives us a critical competitive advantage, which has enabled us to win the customer base we've got. Next slide, please. And we've, in preparation for our growth, we're going through a rapid growth phase. We've made a couple of great hires recently. Nick Mulder's COO joined us 6 months ago from Sensata, where he was responsible. Sensata are a multi-billion-dollar US company that makes sensors for the automotive industry. He grew their electrification division within Sensata from a very small base to a £200 million profitable business. He's got direct relevant experience. He joined us as COO 6 months ago, and recently Tony Radcliffe as CFO has joined, who's got significant experience of small growth companies. So we've been strengthening the team in anticipation of our continued growth. Next slide, please. And we are operating in multiple sectors. So I'll go through some of the details of the projects. We're involved in aerospace, performance, automotive, and marine. But our main focus is what I call heavy duty difficult stuff. We are carving out a significant market share in heavy duty sector, where the products are not straightforward, and that's going to generate our real growth over the next few years. Next slide, please. And we've got significant IP. As I say, we design and manufacture our own product. And the value of our current market cap, I think, is more than covered by the value of our intellectual property in our design of our motors and inverters, and particularly the software behind the inverter. There's a critical thing in automotive called functional safety. It's not very well understood by a significant proportion of the market. And for our automotive inverter, we have got fully certified functional safety, which is in production for one of our customers. And this software and hardware capability, again, is what's attracting the customer base that we've got, so that we have significant value in the core IP that we have developed. And this has been developed over the last 10 years. Next slide, please. And our vertical integrated approach gives us a number of significant competitive advantages. We are designing product for specific market sectors. So if you look at the motors at the top of the picture there, on the left-hand side is the competitor motor for the bus industry. It's made by a company called Dana, their TM4 motor. It's the same performance as our own motor. Our motor is half the size of the Dana motor. To drive the motor, you need a thing called an inverter, which is the electronics box that converts the power from the battery into the signals that are needed to drive the motor. The competitor motor has twin inverters. We've managed to design something that's half the size, half the cost. And this is because we are designing product for specific market sectors. So this gives us a competitive advantage in terms of our ability to install smaller, lighter units on vehicles, but also a cost advantage because smaller and lighter actually means there's less bill of materials costs. So we have significant benefits of the vertical integrated approach. Next slide, please. And we are already a global business. So we have we've had a bus running in Buenos Aires for the last 2 years, very successfully. Fire trucks running in North America. We are developing rocket motors for a company in Australia, and we are successfully supporting that from our base in Norfolk. Our customer base includes people like Caterpillar, a global leader, First Group, the biggest bus operator in the UK, Transport for London, Emergency One, the biggest fire truck manufacturer in the UK, Big Bus Tours, the biggest tour bus operator in the world. So a lot of our customers are either global leaders or leaders nationally. Next slide, please. So we've got current focus on buses, and particularly we identified an opportunity for early revenue growth by repowering existing diesel buses. So this involves taking a bus which typically will have a life of 15 to 20 years. It's probably, say, halfway through its life. And by removing the diesel engine and the rest of the powertrain, diesel engine, gearbox and fuel tank, and replacing it with our own electric powertrain, we can effectively give the operator a more than 50% cost saving over buying a new electric bus, and they can extend the life of their asset. So this is now rolling out successfully. You can see at the top there is our repowering centre in Norfolk, which is a 50,000 square foot hangar on a site which also, it's an XRF airfield site, gives us an opportunity to test the vehicles. That's currently full of vehicles being repowered, and we can see there's some big buses at the moment. Next slide, please. And repowering is actually a global opportunity. We've currently just announced last week, we've taken on a head of business development who's based in the US to look at the US opportunity. If we look at those yellow school buses, there's 480,000 yellow school buses in North America. There's a company called C Electric, which last year announced a $100 million contract to repower 1,000 of those. So repowering offers us a significant growth opportunity, and we're currently looking at and developing the North American opportunity, which will benefit from the experience we've had, the successful experience of repowering in the UK. Next slide, please. However, repowering is a means to an end. Our vision is, as a business, we will continue to be and become a significant tier one supplier of components for predominantly the heavy duty industry. We are already supplying new products. So if we look there at the fire truck on the top of the picture, that's from a company called Rev Group. Rev Group are the second biggest fire truck manufacturer in the US. We've supplied the complete hybrid powertrain for the fire truck. So this, our electric powertrain enables them to drive zero emission to the destination and then power the pumps, etc. when they arrive. That's now rolling out in production. Bottom left of the picture there is a de-icing vehicle for Textron, again, another Fortune 500 company. Successful trials were carried out in Sweden last winter. We're currently now starting production with those guys. So we already have a growing OEM base, which we see as being that's the vision for the company is in 5 years' time that will have grown significantly. Repowering it enables us to generate revenue with a much shorter sales cycle to enable us to accelerate our growth in the short term. Next slide, please. But we are also in adjacent industries. So we have aerospace projects. On the bottom left, Equipmake supplied the motors and inverters for a UK eVTOL company called Vertical Aerospace. So the prototype which flew last year had Equipmake product on. And on the top is a satellite launching vehicle developed by a company called Gilmore Space in Australia, where Equipmake was commissioned to design and manufacture bespoke motors and inverters for rocket fuel pumps. Now, with these projects, what these enable us to do is develop cutting-edge technology, which is funded by the customer at a margin, and then we're selling them the product at a margin again. So it's lower volume, high value, funds our R&D, and Equipmake retains all of the IP developed in these high-performance projects, and that then feeds into things like the bus and heavy-duty drivetrains. So it enables us again to generate early revenue, but crucially helps us to fund our R&D, which will then feed into the other programs. Next slide, please. And our most exciting aerospace opportunity is actually with a Swiss company called H55. Under this project, Equipmake is developing the motor, and this will be the first fully certified, fully commercial electric aircraft in the world. So it's a global first. We're developing that with the regulatory authority EASA in Europe, and from an IP point of view, there's significant IP going into this product to enable it to have the safety and reliability, and will be a global first. So again, it's another example of where Equipmake has been chosen due to our significant leadership in terms of our intellectual property for motors and inverters. Next slide, please. And this project we can see here was for Rimac Automobili. So Rimac are 50% owned by Porsche. They make the fastest electric supercar in the world. And Equipmake has developed a fully automotive certified, full functional safety inverter, which is in production. So we've delivered well over 100 of these to Rimac for production. Next slide, please. And we also have marine projects, again, where we are leveraging the products that we've developed for other markets for high-value marine applications. So again, these other adjacent markets enable us to get early-stage, high-value product, which is funded by the customer for development. Equipmake retains all the IP, and that then feeds into our core business, which is the heavy-duty business. Next slide, please. We're currently growing very fast. Our growth plan, which we're on target with, shows, and here we can see the repowering business gradually tailing off as the OEM business builds up and EV component supply business. So the vision for the company is that over time, that will grow to thousands, tens of thousands of units that we'll be manufacturing here in Norfolk. Next slide, please. We also have opportunity for licensing, and Sona Comstar are an Indian manufacturer of low voltage motors and inverters. They make over 2 million starter motors and alternators a year for the likes of GM and Ford. They wanted to get into the traction motor business. They approached Equipmake. We've licensed our technology for local manufacture and sale for the bus market in India. So licensing gives us additional revenue streams. Next slide, please.
You're going to have to wrap, Ian, please. You're just about to run over.
Okay, and then finally, just quickly with Caterpillar, we were chosen by Caterpillar to do motors and inverters for their zero emission project, and this is giving us our pathway through to higher volume production in about 5 years' time, and I'll wrap it up there. So, thank you very much for listening. Thank you.
Thank you, Ian. We've just had one question about, how well patented are you?
Yeah, so we have about 20 patents, either pending or current. I think they are important, but actually the more important thing is to be running fast and be the fastest to market. But our policy is to apply for patent protection where it is, we have a critical advantage. So we do have a patent portfolio of about 20 patents.
And if we'd had more time, I was going to talk to you about being so state-of-the-art in Snetterton. It really is a thing of beauty. But
absolutely, we're 10 minutes down the road from Lotus, which was a global leader for years. So we are delighted to be in Norfolk.
And we're delighted to have you as well, Ian Foley, founder of Equipmake. Thank you very much indeed. Thank you.
Thank you very much. Thank you.
Okay, so we're on to our next company of the day. It really is a celebration of the Aquis market, isn't it? SulNOx, it is a fuel tech group working with shipping majors on cutting emissions. Now, recent results showed a tripling of revenues as the company continues its aim of becoming the energy transition stock that everyone is talking about and buying shares in. Ben Richardson is the Chief Executive. A warm welcome to you, Ben.
Hi, Sarah. Lovely to see you again. And many thanks to everybody for allowing me the opportunity to present today. I'm actually joining you from Athens. We're here on for Posidonia, which is probably the world's largest shipping there every 2 years. So thrilled to join on a webinar. Okay, so after a disclaimer which people can read at their leisure when we share the presentation, SulNOx is a product that is addressing, as Sarah said, the significant need to reduce fossil fuels, and that's come about as a result of regulation having now teeth to enforce the reduction of fossils and drive emissions reduction. Such an example would be in the shipping industry, where there's a regulation called the Carbon Intensity Indicator, which is forcing ship owners to now pay for 40% of their CO2 emissions for journeys in and out of ports of Europe. And that is only going to rise as the regulation gets more punitive through time. And as a result, prices will go up as the cost of the EU ETS offsets have to be purchased, and they get more and more in demand and less in supply. So we all hear about decarbonisation, and I'm thrilled Equipmake is doing its stuff with batteries. It's the right solution, but unfortunately, batteries are 10,000 times less energy dense than fossil fuels. So we're not going to be able to put batteries in everything anytime soon. If you can imagine, an aircraft would need to have a wingspan 10,000 times bigger and be shedding its weight as it would when the fossil fuels are reducing. It's a shame that hydrogen, which is a fabulous solution, needs a whole new infrastructure. And the same can be said for fuels like green ammonia or methanol, which we hope will come in to the shipping sector. But it's clear that fossil fuel consumption is still going up in the world. And whilst we try in the Western world to reduce our footprint as much as possible, it's very clear that the emerging market is driving demand for fossil fuels and will be for a long time to come. So as Sarah said, we are the energy transition solution. We are a zero capex company, which enables fossil fuels to burn that much cleaner, which reduces both consumption and critically emissions. We are Aquis Apex listed and thrilled to be part of the big five that are coming up for the company of the year. And our goal is to now progress our unique green chemistry across the globe. It's fully patented and scientifically tested, and we're able to influence as much as 70% of every barrel of oil. So if I tell you a little bit about us themselves, the product that I've shown you here can be bought on Amazon, so you can use it in your car, your petrol or your diesel car. It works also with light fuels like very low sulfur fuel oil in the shipping industry and indeed marine diesel. And it's a simple pour-in product that goes to work to improve combustion. By improving combustion, it means we see a typical 8 to 10% fuel consumption reduction, but a 30% reduction in greenhouse gas, and more than 50% of the black smoke that comes out of exhausts also is disappearing, and so saving money whilst also reducing emissions. The second product that we have is the core ingredient of the product I just mentioned. It's an emulsifier, it's a stabilizer in nature. And that's really important as we move from fossil fuels into bio content in fossil fuels. they are inherently unstable biofuels, and we will stabilize those. The picture here shows heavy fuel and water mixed 5 years ago now, and still not split out. Now, if you didn't have SulNOx, that might split out overnight, to give you an idea of how effective it is. We can also reverse the chemistry and split out water from waste oil, which is a multi-billion-dollar market that we're just getting into. So how it all works? Well, we improve combustion in 2 ways. Firstly, if you understand that fuel particles actually quite large from the outside in, and that's why you get the black smoke coming out of the exhaust. SulNOx's emulsifiers actually get inside the fuel particle, and we take any water that's in the fuel or from condensation and use that to our advantage too. But getting into the fuel chamber, the fuel particle will explode because of the emulsifier in that particle. For smaller particles, can react better with oxygen that's made available by the glycol ether as well. So you've got smaller particles burning more completely, which leads to fuel consumption reduction and emissions reduction. And that crucible down the bottom actually shows heavy fuel oil, which is like Marmite, burning cleaner than diesel. So it's really impactful. But the product also adds lubricity. Sulfur used to be in the fuel, and that used to provide the lubricity. We're now adding that back in, and we're also adding surfactants and detergents which clean the whole fuel journey, so making making improvements to the mechanical side of engines as well. So in short, we are reducing costs 8 to 10%. We're reducing emissions, and critically, we're allowing companies, heavy industries, to meet their ESG goals. So if you're a mining company, there's very little you can do to reduce your carbon footprint. You have to use generators, you have to use heavy machinery, which can't be converted into batteries at this time. And this is providing an instant solution to cost save as well. So in terms of the emissions themselves, by improving combustion, we're reducing the black smoke by more than 50%, but critically the PM 2.5 by more than 60%. Those are the things that will kill you. 19,000 people a day die of particulate and NOx pollution, and SulNOx are reducing the NOx more than 30%. In terms of how we perform as a carbon reducer, when you burn a liter of diesel, it will emit 2.6 kilograms of CO2. To treat it with SulNOx, it's just 2 grams, but with an 8% efficiency, it turns into 100 times carbon reduction. Now we're looking to try and carbon credits by reducing fossil fuels, by reducing all of the greenhouse gas and particulate matter, and that will be a large revenue generator should we be able to achieve that.
Ben, if
so
you
in terms of the market,
Ben, if
yes,
you just switch off your video, and that will maximize the bandwidth for audio, because we're just losing your audio just a little bit.
Okay.
As handsome as you are, we don't want to see you. We just want to hear you.
My mother always said I had a face for radio. And anyway, so if we look at the market itself, we are able to influence every drop of petrol and diesel. So getting into petrol stations, we're making significant progress in Africa, where those that stock the SulNOx product are now reporting 4 times growth. So there's a huge customer demand for the product. And for SulNOx to make profits, it requires about 200 petrol stations to use the product. And we're talking to many thousands. In terms of transportation, obviously huge global market in trucks and logistics, but really shipping is why I'm here in Athens. We're talking to around 5,500 a fleet of around 5,500 ships in our pipeline at the moment, and we really only need 40 of these vessels to buy the product and for us to become a profitable company. And this is because when ships use SulNOx, they burn 30, 40, 50 tons of fuel a day, and for one ship, they're saving maybe $250,000 or $300,000 per annum. But as I mentioned, mining consumes a huge amount of fossil fuels and generators. I was in Nigeria only a couple of weeks ago, where every home has 2 generators due to the power supply grid being not reliable. And then you have power stations and those islands around the world that rely solely on generators, where we're showing about a 15% reduction in fuel consumption. So looking forward, we're super excited. Sarah, you mentioned our revenue growth. Yes, well, this is the hockey stick that we all want, and our share price is also mirroring this, as indicated by Sara earlier. It's a hugely developing growth plan that we've got. We've just hired someone in North America. We're just dipping our toe in India and China, now showing interest. And as I mentioned, the biofuel world is going to expand dramatically, and we're able to assist there. So revenue growth is expected to continue and to be multiples of what it is today. In summary, we are now already in more than 34 countries in the world and selling to all of those different industries through distributors. So our cost base is low because sales and manufacture of the product is outsourced. And in terms of summary, we are able to reduce emissions and fuel consumption, saving customers money whilst saving the planet. The product is patented. It's all green in its nature. It's very difficult to replicate as it's patented and made by the old AQSE Nobel, now a company called Neame. We are a high margin business, and every revenue that we generate is repeat. It's a subscription revenue. So this is why we see revenues looking to increase dramatically in the future. And today, whilst we're looking to save the planet, the product's core ingredients, those green emulsifiers, are actually able to move into food and botanical extracts. So the bioavailability, how quickly it gets into your bloodstream, can be improved. And then even looking at E numbers. So if you look on the back of a food packet, the E numbers, they're emulsifiers. And we have one of the strongest, best all-natural versions of that. And if I haven't explained enough or anything else, then please, this is the real reason we need to do something fast to save the planet. And that's what we're able to do with SulNOx immediately. And I'm very thrilled to take any questions now.
Ben, please come back in vision now. Thank you very much indeed. It's good to hear that you are patented, because just listening to the supplementary business opportunities, they are huge, particularly the waste remediation, you know, where you use your demulsification process to clean contaminated water of waste fuel and oil. I'm just wondering, one step further, you know, the political bugbear is the discharge coming from water companies. They don't necessarily put fuel and oil contaminants into the water, but actually we don't know what they put into the water or the streams. But I'm wondering if that is something else that the business would consider.
Well, it's we have certainly, last COP, there was actually talk in Egypt of the grey water that was leaking out from oil business into the coral reefs. That's certainly something we can do. Our own water here, no, it's probably not something we can get involved in, but my science team might think differently, but we've got to stay focused now. We've got a wonderful market of pretty much every fossil fuel user in the planet, every internal combustion engine. We've got to fix that problem now, and then get excited about all the other things we can do later.
So is it true that market, the market that you're focusing on at the moment, is 10 billion litres of fuel a day, or is that a conservative estimate?
Yeah, well, I think it's actually even more. Yeah, 70% of every barrel of oil, so it's 70 billion barrels a day that we can actually influence. And where I am in Africa, we're talking about trying to put it in the refinery level. And if an African nation is importing 10% less fuel, then it's going to do wonders for its GDP, its balance of payments, its currency. So that is the ultimate dream. And it's just worked so well in Africa. It's actually going viral now in Ghana and Nigeria. The price of diesel's gone up 5 times. So for a product that can reduce their consumption 10-15%, it's a humanitarian thing as well as a cost saving.
You're a globe trotter, all these countries being mentioned. Thank you very much. Ben Richardson from SulNOx, it's been a pleasure, and good luck.
Thank you. Love to see you again.
Yeah, thank you. Thank you very much indeed. And thank you also for participating in this webinar, a celebration of the best that is part of the Aquis DNA. Okay, now One Health Group. It's a team of consultant surgeons and healthcare managers working with the NHS to provide faster local and expert care in orthopedic, spinal, general surgery and gynecology. Adam Binns is the chief executive and Derek Bickerstaff is the chairman. A very warm welcome to you, gentlemen.
Thank you. Thank you, Sarah. If we just go through to the next, straight on to the next slide, first of all, thank you. I'm Derek Bickerstaff. I'm the chairman of One Health Group. What is One Health? Basically, we are part of the supply chain for National Health Service, and all our services are free at the point of delivery. We basically supply elective surgery, which forms 80% of the waiting list, and as you know, the waiting list at present is standing at 7.5 million, and is a huge concern, one of the biggest concerns in the incoming general election. So we provide general surgery, orthopedic surgery, spinal surgery, and gynecology. And we do this throughout quite a wide area where we do community clinics. So we work mainly in the north of England and the Midlands. We have over 100 surgeons who work with us now. We work over 35 clinics over a very wide area. And from those patients that we see there, if they need surgery, we bring them to about eight surgical centres. So we're a company that is constantly growing. You will have seen with the election coming up that both major parties are supporting the use of the independent sector to try and deal with the waiting list. When I started as an orthopaedic surgeon, the waiting lists were huge. They eventually got down to 1.8 million under the last Labour government and are now back up at 7.5 million. So we believe that we have an excellent order book going forwards, and we have a very as an investment opportunity. We're a growing company, we pay dividends, and we have some exciting plans with regards to how we're going to grow the company. Next slide, please.
Good afternoon, I'm Adam Binns, Chief Executive of One Health Group. So I think it's worth just running through a couple of headline numbers around One Health Group. The numbers on this slide reflect our latest year end, that being March 24. We're in closed period, so I'll be careful what I say and how I say. There's nothing I shouldn't be revealing here. As Derek touched on, we deploy or subcontract over 100 NHS consultants and anaesthetists to deliver the service. Our service is wholly NHS. All our income on the right-hand side there, just over £23 million, is derived from NHS activity. And it's done through a well-established system called patient choice, which we'll come on to in a second. But importantly, to the top right on that slide, the national AQP status, we've held since 2011, gives us a footstep into any area of England without having to establish a contract. So we've grown over time, as Derek touched on, every year without fail, with the exception of pandemic, COVID year, through the application of the AQP status, which I'll explain a little bit later. Next slide, please. So this is one of the best kept secrets in the NHS. Patient choice was established in 2006 under Tony Blair, and it effectively gives patients the statutory right, when they visit their GP, to choose a provider of care. Importantly, that provider delivers that care free of charge. It's all funded by the NHS. And this is again how One Health derives its income. Now, this is increasingly important given the waiting list Derek's touched on 7.5 million. There's never been a greater need for supporting the NHS by independent providers like One Health Group. And where we are unique in our offering is because we focus heavily on the community. Most of our activities is carried out close to patients' homes. They're not travelling to the large hospitals that we should be many, many miles away. And in terms of the way that income is split, on the right-hand side of that slide, I'm trying to show the allocation of income to costs. So on a typical hip or knee replacement, where we get paid around £6,300, we pay the surgeon, the anaesthetist, and the independent hospital groups we use to use their facilities to provide the surgical service. What's left is our gross margin. So to repeat the point, there's no cost to the patient. They can choose One Health Group over the NHS. We're quicker, we're free, we're faster, and we're local. Next slide, please.
So when we consider our business, there are three main factors with regards to how we can grow. Do we have enough patients? Do we have enough surgeons to be able to operate on these patients? And do we have enough surgical capacity, i.e. operating theatres in which to do the surgery? Actually seeing patients in clinics and doing the rehabilitation in the community is extremely easy, and there's loads of facilities that we can use. So that's really not an issue for us. So first of all, patients. Well, as we've mentioned already, there is a huge patient demand. With waiting lists standing at 7.5 million, and we have to remember that constantly people are being added to this waiting list as well as removing. And so there's a huge task to bring waiting lists down, even if it got down to the level it was in around about 2010, where it dropped to 1.8 million. Prior to COVID, it was standing at 4 million. So we've seen a 30% increase over the last year on the number of patients that we saw. And we're constantly growing our geography. We're basically in the Midlands and North Yorkshire. But as we constantly grow our geographical footprint, we get more and more patients. As Adam has mentioned, the majority of the patients we get is through direct referral from GPs through patient choice. But we now work with 5 local NHS trusts who can't manage the patient on their own waiting list, so we help support them. Next slide, please. Do we have enough surgeons? Well, the answer is yes. In the last year, we took on a further 15 surgeons. We have another 30 surgeons in the pipeline. We are constantly looking for surgeons, but equally, surgeons are often applying to us. And as we grow our geographical area, more surgeons become available. And we offer a good product for the surgeons, because basically, as a surgeon, and I'm a surgeon myself, we like to sit in clinics, see patients and operate. We don't like all the admin stuff around it, and that's basically what One Health does. When One Health gets the patients, delivers it to the surgeons, we sort out all their administration. And critically, we also sort out all the clinical governance, and we have an extremely robust clinical governance program within the company. So we are very happy with the number of surgeons and the quality of the surgeons which we were on board. And next slide, please. And with regards to operating capacity of anything, this is the one which is more restrictive. But we are now working through 8 hospitals, and we're constantly increasing the capacity, surgical capacity we have. We are also plan to open surgical hubs, and we'll hear a little bit more about that in the next slide. But basically, we work over such a wide geographical area. We know there are certain places within the geography that we work in which is supported neither by the NHS nor by any independent sector hospitals. And we have plans to drop in what we call a surgical hub, which is not a hospital. It's basically just bed and an operating theatre, because all our care is out in the community. So we have plans to drop these into places within our patch where we know that there is a necessity. And in addition, we also explore insourcing, and we do work with 2 hospital trusts with regards to doing insourcing, which basically means we use their provisions. Next slide, please.
Okay, quick snapshot of our trading update. This is quite old now. We released this on the 23rd of April and release our full results on the 24th of this month in a couple of weeks. So kind of a snapshot, there's no new news there, but I think most important one to draw your attention to on there is the last one. So historically, over the past 20 years, One Health has transacted with NHS contracts, which are as robust as they get, but on 1-year renewal contracts. For the first time this year, following a bit of pushing and negotiation, we've secured 5-year contracts with our 2 largest commissioners to take effect from this year going forward. And what that means in real terms, it gives us income and profit security to consider investment, which comes on to things like surgical hubs, which I'll explain more on the next slide. Next slide. So surgical hubs, as Jake's touched on, are not hospitals. They're highly efficient, compact, focused on high tariff, quick turnaround procedures like hips and knees and some spinal work. We've established the first location for one of those. We'll share more detail at year end, and we're developing that very quickly with more in the pipeline longer term. And importantly, this mirrors the approach of the NHS. You'll have heard about the multiple hospital programs for the NHS. What that often means is a surgical hub alongside a hospital. Our use will be totally standalone and deliver high revenue, high profit, very efficient service in areas where there is no current supply. So we're not going toe-to-toe with hospitals, we're not going toe-to-toe with the NHS, we're highlighting areas where there is more surgical capacity required, and that's where we'll do the work. Next slide, please.
So we think our outlook is great. We think we're a great investment opportunity. We have a huge patient demand. It's unlikely that the millions will be brought down, millions of patients waiting on the way to this will be brought down anytime soon. We have always paid dividends. We have a progressive dividend policy. We are seeing our revenues increase, our profits increasing, and we only see a tailwind behind us, and to be honest, supported by both political parties and also by the Royal College of Surgeons. So we believe that we're a good investment opportunity with great growth potential. Next slide, thanks.
And last slide, quick summary of where we are and where we're going. So One Health is now very well established as part of the supply chain in the areas where we operate. Patient choice will only expand. There's a significant awareness campaign underway now with not only central government but also the NHS to let patients know they can choose. And importantly, if they're already on the waiting list, they can choose to come off it and select providers like One Health. We're working very, very hard on that. I think into the investment case, which is probably part of the purpose of the call today, we've been established for 20 years. We're growing, creating more profit, which create an awful lot of cash. We're very asset light. We closed the year with 4.7 million quid. We support not only investment, but also payment of dividends. And I think it's also worth highlighting, we listed, as we mentioned previously, in November 22 on Aquis, but at the time we had a share option scheme in place for not only employees, but also subcontracted NHS consultant population. Over the past year and a half, since we listed now nearly, we had nearly 30 of our consultants who aren't employees buy and hold shares in One Health Group. We think that's a really strong message to their confidence in what we do and their confidence in our future and where we're going next. So we believe, clearly unbiased from also an investor, that we are a very good investment opportunity that's making money, generating cash with some really strong strategic growth plans. Thank you.
Thank you.
And I bet those 20 years have just flown by. I know you're in a closed period, and I can see that you've encroached into North Yorkshire. This is from my dad. My dad is in Durham. He said that's as good as North Yorkshire. He says, hurry up because he needs you. So I know you're in a closed period. What are the plans for getting into Durham and the outlying districts? Because you've got Derbyshire, Nottinghamshire, Leicestershire and Lincolnshire covered. What about the rest of us?
We're expanding all the time. It's very simple, Sarah. So the key ingredient for that, as Derek touched on, is surgical capacity. Outreach clinics are very simple to set up. We can open and close one in 2 months if it doesn't work. So consultants aren't an issue. We're getting more and more NHS consultants applying to join us and work with us to support the business. So where we can find surgical capacity, and Durham is a key area, funnily enough. We have a hospital that we're talking to at the moment, very early days. But once that's secured, outreach clinic comes along, AQP states we can provide a service, and your dad will be on the list.
We've got a question from the audience, 2 questions. How long does it take to get a contract with an NHS trust? And what does an ideal contract look like in terms of value and duration?
So 2 ways we contract. One is with the commissioning system within NHS, which isn't a trust. We don't need that. AQP means we can start anywhere without a contract. As the activity builds, it then becomes a contract through just negotiation and development of the relationship. The trust contracts, the last contract we set up with the local trust, it would have been 5 months ago. It took about 22 days because they were desperate for support. We have a framework that we can apply at any point that's an NHS recognised framework. Signatures, we transfer signatures both ways and we're into activity. So there's no barriers to entry on having contracts to AQP, but also 20 years of proving what we do and what we do well. And the key point here is we are 100% NHS. We're not chasing private work and backfilling with NHS. Our primary drive is supporting NHS patients, which is a really easy story to sell to NHS providers.
Supplementary question. How does your consultant pay compare with A, the NHS, and B, the private sector?
Well, with the private sector, it's pretty much the same as they would be paid if they went to any of the major private hospitals, such as the Spire Group or Circle Group. With regards to the NHS, it's difficult to answer that question because in the NHS you're paid an hourly wage, whereas we pay per item. So if you do one hip replacement and it takes you all day, you will get paid more in the NHS to do that. But our surgeons will do 5, 6 hip replacements in a day, and so they'll earn more money that way. So it's difficult to answer you directly because they're paid together. But needless to say, we have a very attractive offer to surgeons. We have no shortage of surgeons who want to join us.
It's also worth highlighting as well, and we get asked by investors fairly regularly, in terms of the way we transact with our consultants, we buy their free time. They contractually, through the NHS contract, are able to sell that time to any provider who chooses to buy it. And that's where we buy that surgery capacity. They're also contracted, but we make a very attractive offering. As Derek touched on, we can do 5 hips in a day versus 1. They get paid for each of those 5. I won't go into the detail, but they can make a significant amount of money.
Lovely. Adam and Derek, and that's a message from my dad, Raymond Lowther. Well done, guys. Hurry up. Thank you very much, Adam and Derek from One Health. Thank you very much indeed. Here's to the next 20 years. Okay, to our final, and thank you, Dad, to our final presentation of the afternoon. It's Incanthera. It's focused on innovative technologies and dermatology and oncology. It has a commercial deal to launch its Skin Plus Cell as a luxury skincare brand. This deal has been described as transformational. It's also been nominated for Aquis Company of the Year 2024. I'm delighted to be joined by the chairman, Tim McCarthy. Tim, over to you.
Thank you very much, Sarah. Okay, thank you. Here we go. So what this, the very first slide says is that we have a game-changing launch with our unique Skin and Cell product range, luxury skincare range, with the world's largest health and beauty retailer. And that's a pretty strong statement. And I'll go on to explain that in the following slides. So next couple of slides, please. And again. But first, let me just bring you an introduction to the company itself and where we emanated from. So Incanthera was a spin-out of the Institute of Cancer Therapeutics, which is a dedicated unit on the University of Bradford campus that is dedicated to world-breaking, world-leading cancer therapeutics, hosts about 100 staff from professors down through PhDs, very highly qualified, doing some fantastic work in the area of cancer research. And they got to the point where they had 2 or 3 different types of technology, which they had to spin out into a company that was able to then take it through the development phase. And that's how Incanthera started in 2010. And that's obviously where the name came from, Incanthera, from the Institute of Cancer Therapeutics. We developed as what I would call a typical biotech company, researching into pharmaceutical development, specifically in cancer in our case, for the next 10 years. And then in February, last day of February 2020, we listed on the Aquis Stock Exchange. Brilliant timing, as that was the day before the whole country locked down with a COVID pandemic, but never mind, we've survived that as everybody else has. But recently, we have been developing the cancer side of the business, very much focused more into the dermatological applications and how we can use our patented technology to make a real difference in that area. And that was demonstrated in December 2023, when we announced this commercial deal with, as I said previously, the world's largest health and beauty retailer. And specifically, the deal was signed with their European subsidiary called Marino, but this is part of the worldwide A.S. Watson Group, which is based out of Hong Kong, part of the C.K. Hutchison Group, and that has around 16,000 stores across Europe, China, Asia, operating in 28 different countries. So a massive group. And as Sarah introduced in introduction to me, this very much is transformational for the company. Next slide, please. So we have, because of the deal we've done with Marino and Watsons, we have changed the immediate focus of the company from what I would call the typical pharmaceutical development into what is now more a revenue generating, profitable company. And this is very much how we have developed this product range, Skin and Cell as we call it, which is a luxury skincare range, taking advantage of our patented technology to be able to deliver certain active ingredients and certain products through the skin. Now, if you look at your skin, as you often do every day, you will appreciate that it's a very robust organ of your body. And I do call it an organ because it is very much like your heart and your lungs. And it's very robust in the fact that it doesn't leak when you go out in the rain. If you happen to cut it, it repairs itself. And it's been a challenge in the industry, in the pharmaceutical industry especially, to be able to deliver drugs or other active ingredients through the skin. And what we've been able to do in Incanthera is to bring a well-known active, which has been proven through clinical studies to be able to repair and restore the skin when it's damaged through UV rays, through environmental actions, and deliver it through the skin without damaging the skin and getting under the skin to the cells, the DNA just in the cells underneath your skin, which require repair and to restore them. And this isn't anything that anybody's been able to do before. And this is what really attracted Marino to enter into commercial deal with us, because we first approached them about the pharmaceutical side of our business, because they do have a pharma side as well as their health and beauty side. And they asked us specifically if we would work with them to develop this particular product range, because what they're finding these days is that consumers are much more aware of what they're putting on their skin. They want to put something which not only gives them a nice feeling, it smells nice, and they get a nice feeling like they would with any other skincare range, but they want to know what they're putting on their skin is doing them some good. And we could demonstrate to Marino and Watsons in turn that the technology which we have was able to do that. And from our perspective, it's a fantastic opportunity. The market here is growing every year. There's some projections that it's going to reach 180 billion this year. So a definite recognized demand. And so we spent most of 2023 going backwards and forwards with Marino, developing this technology precisely to their requirements so that they could introduce it into their market, which they're planning to do later this year. Next slide, please. So just a little bit of the science behind it. So what we're doing, in fact, is to deliver a bioactive vitamin B3. It's also known as niacinamide. And this has been proven in clinical studies that were conducted in Australia, not by us, I hasten to add, a couple of years ago, when it was given orally to patients, that it absolutely demonstrated that it repaired the DNA of the cells just underneath the skin, which had been damaged by UV rays, by environmental attack. And a very, very successful study. Unfortunately, the product itself was never introduced into the market, the pharmaceutical market or any other, because it was challenging from a practical perspective to ask patients to be able to take this product every single day in huge quantities. Because as you imagine, if you take something as a pill or a capsule, you are having to ask it to get all the way through your body's systems, and the body naturally tries to get rid of these types of drugs as they come into your body. So you have to overload the body's systems in order to get it, what I would call inside out, so that it works its way out into the dermal layer just underneath the skin. So by reversing that whole process and being able to apply this on the skin directly, and it's able to a patient, or not in this case a patient, but a customer who's looking for both the luxury skincare, but also the protective quality and repairing quality, which niacinamide has been proven to be able to deliver, then we are giving it only, or the consumer is only taking it as and when they need it, when they're exposed to the sun's rays or out in the environment. And by that means, we are the leading player in this, and in fact, this is what attracted Marino to this, because they're looking for innovative products which they can put on their shelves to bring footfall back into their stores. And this is very much what we have been able to deliver to them through working with them hand in hand over the year of 23. Next slide, please. So what that led to was an announcement in December 2003 that we entered into this deal with Marino and A.S. Watson, and we had agreed that we would manufacture the first production order for them of 25,000 units for an initial launch in their stores in Switzerland and Austria later this year. And the 2 or 3 different criteria which they asked for, one was that it was a very well packaged, well delivered product. So we developed this with them and with a manufacturing subcontract manufacturer in Switzerland called Frika. And this is what we have ended up with in the sense that we have contracted Frika to manufacture everything, so we don't need to invest in our own manufacturing facilities, so very low cost of goods for us. And what we then went on to do, if we go on to the next slide. So this deal is developing through the year as we move. So in discussion with Marino through the early part of this year, they said to us they were very keen to increase the initial launch order. They're very excited about the test marketing which they have done with their consumers and the introduction of this range. And so we announced in March 24 that we had doubled the first order from 25,000 units to 50,000 units. We had brought on an extra part of the product range, so it increased from 4 to 5, and expectations that further orders would be of an order of magnitude greater, and we've indicated here second order to be about 250,000 units. And what we also did at the time was to employ Stanford Capital, our broker, to produce a research note, and within that, and I'll show some of the extracts of that in a moment on a future slide, that the first order of 50,000 units was about to generate revenue of £2 million, and by their own projections, produce a revenue for the first year of £10 million, which would be to the end of our first financial year of March 25. And this was received with obviously a lot of fanfare, the fact that the order was increasing, the fact that Marino were demonstrating their faith in this product. So we carried on, obviously, with manufacturing and ready for the launch. And then if we go to the next slide, just this week, 2 days ago, in fact, we have announced that due to a couple of things. One, a continuing interest from Marino to up the orders and do a much bigger launch than we'd originally anticipated. And following the update in March, we got some unprecedented approaches from some very well-regarded small cap fund managers in the city to see how they can get involved in the company. And so we put together a deal which we announced on Monday, which involved a new fundraising, and that certainly has brought a number of new institutional fund managers into the stock. And we also announced that we had doubled the initial order again from 50,000 to 100,000 units, which again, that was in conjunction with Marino saying that the more that you can deliver, the more that we can sell. And they're getting very excited about this and the initial test marketing they've done with their consumers. So we have revised the revenue forecast yet again from 2 million units, £2 million, sorry, to £4 million from the first production order. And we certainly expect to exceed the guidance that we gave before of revenues of 10 million for this full year. I'm not going to put a number on it, but certainly we certainly expect to exceed those 10 million revenues. And also, the original idea was that we would launch in Europe in around the middle of this year, and we would launch out into the wider market in Asia sometime around the first quarter of 2025. But recent discussions with the group out of Asia and based in Hong Kong from the group CEO, they are very keen to get this product on their shelves in Asia as soon as possible. So we're in discussions at the moment with the group as to how we can accelerate that launch in Asia. So watch this with this space. And with all of this, we announced the institutional investor-led subscription and sale shares totaling just over £4 million. Now, it's important to say that this money coming into the company is all going into inventory, and this is what's driving the revenues. And when we talked about this being a transformational deal for the company, it really is a transformation on the typical, what I would call a typical non-revenue generating loss-making company, relying on the capital markets to fund the development of pharmaceutical development. And we're turning this on a sixpence to a company which is immediate revenues, immediate profitability, and the prospect of immediate dividends for shareholders. And every penny that we have just raised on Monday will be going into inventory, and more inventory that we can produce, then the more that we can supply to the Watsons Group generally, and the more that they can sell. And they've made it pretty clear to us that the more that we can deliver, the more they can sell. So the idea is that this recent equity increase will allow us to drive that profitability, drive that revenue. And then in the second half of this year, once we start to produce those revenues, then the revenues will go straight back into inventory. We fully intend to kick in outside trade finance, which is non-dilutive. And we're talking about some pretty chunky trade finance facilities, maybe 5 million from one, 10 million from another. So you can see how all this is going to get an accelerating effect in terms of driving the company forward and its financial profile. So next slide.
Yeah, you're going to have to wrap up, Tim, please.
Okay, no problem. So this is from the Stanford research note, projecting revenues of around 10 million this year, driving it's up into the 30s and 40 millions on their conservative estimate. But once we roll out to China, you can see these revenues are going to get extremely chunky, with going up into the hundreds of millions per year, and with 30% EBITDA on the bottom line. Next slide, please. I have to say we've had fantastic experience on Aquis, and I don't agree necessarily with the criticism that Aquis always gets, that it's a lowly traded market. I think it is all about the company profile. It's about the IR and the PR that the company does. And the last bullet point on here just demonstrates that since we announced the deal in December, we've had 53 million shares traded in the last 6 months. Next slide. And also the shareholder analysis, our experience here is you can certainly attract good institutional investors into the stock. And in fact, that pie chart there will grow that piece of the pie from the institution from the recent fundraising in the next month. But it's a nice balance we've got between institutional, retail, and a few other the founder shareholders. And the next slide, which I believe should be the last. So in summary, we've got a company which we've turned just in the last 6 months from a non-revenue generating loss-making company into generating fantastic revenues from this deal. We still have the opportunity to expand the product range into other markets not connected with Watsons in North and South America, Australia, etc. And this calendar year ending March 25, we will be producing revenues in excess of 10 million. We're definitely profitable and cash generative. And we have made a statement that we will be paying dividends straight away to shareholders. And if you look at some of the numbers that were in that earlier slide on the revenues and EBITDA, we're currently valued at about 20 million on Aquis. So I don't expect that valuation to stay where it is. I expect it to be many multiple times of that within the next 6 to 12 months. So I'll call it at that, Sarah, and let you ask any questions that have come through.
Many, many thanks. And I think we should tell our audience that that Stanford research note is widely available. I found it quite easily on the internet. Chris Holmes asks, are you currently actively pursuing commercial deals in the US, Australia and Africa?
Yeah, thank you, Chris. Firstly, to supplement that, Sarah, the research note is also available on our website if anybody wants to look at it. So, Chris, we have got contacts in many other territories, North America, South America included, and Australia. And we are very keen, obviously, to expand into those areas. But we are very careful not to run before we can walk. And so we are going to concentrate for the next 3 to 6 months on making sure we get the launch right in Europe and in Asia with Marino and A.S. Watson's. And I think at the right time, we will pursue those other deals. There's more than enough to go at just with the deal that I've just described to you. But don't fear, our ambitions are as big as yours. And I know you're a shareholder and a follower of the company, so thank you for that. But we will certainly be looking at those new markets when we can.
So validation and verification, another question. Have you had to get clinical validation for the product in any end market? And is there a peer-reviewed paper showing the efficacy of the product?
I'll do that backwards. There certainly are peer-reviewed papers, clinical studies I was explaining on the product, the active niacinamide. But just to clarify, we are delivering it in a completely different way with our patented technology so we can get it through the skin. And that's important. But also to differentiate between a pharmaceutical drug and a cosmetic. A pharmaceutical drug needs to go through a very highly regulated process with clinical studies to back it up before it can get approval to be launched. This is a cosmetic, and we're not veering into the area of pharmaceutical here, and it's a very fine line that you have to draw. But certainly we are able to launch our skin and cell range without any of those clinical studies that we have to do. But the science behind it is definitely proven through other studies which people have done, definitely.
Okay, we're going to finish with a cheeky question. So you had the unprecedented institutional-led subscription. Can you be bullied by retail investors to do more equity financing? That's obviously the retail investors want to have a bigger involvement as well.
Okay, I'm a great believer in having a nice balance in a shareholder base between institutions and retail. We have a good retail following, and as I say, we weren't going out looking for extra cash this time. This was very much led by the institutions who wanted to get into the stock. So all I can say to any retail investors that are out there that aren't currently a shareholder in the company is to go out in the market and buy some, because certainly the share price and the valuation is not going to stay where it is at the moment. We're not intending to do another equity funding. So if anybody wants to get in the stock who aren't already, then certainly get onto your broker and buy some shares, I would suggest.
Many thanks, Tim. I know it's been a really amazing 6 weeks for the company. Thank you very much. Thank you very much indeed for finding the time. Thank you. Sara-Louise, if you're still there, if you'd like to join me, if you'd like to come back into vision, if you're able to do that, please. I can see you're up there, but whether you're going to come back in vision or not. I am now closing up this webinar, and yes, Sara-Louise, we just wanted to say that we think that you're the personification of the Aquis Exchange. You share so many qualities with the companies that have presented today: unique, unusual, proactive, respectful, hardworking, laser focus on success, and energetic. And I think I'll be lucky enough next Thursday to see Sara in person, because of course it is the Small Cap Awards. We will find out who the winners are. There you go, Sara. I was just singing your praises.
Sorry, I was just running from my desk to a meeting room.
No, that's okay. I was just saying that you are the personification of the Aquis Exchange. Your energy is something to behold. I will be seeing you next Thursday. We will find out who the winners are. So on behalf of Sara and Sarah, myself, and from everybody at the Master Investor and Small Cap Network, we just want to say thank you very much. And the next Master Investor webinar is in 2 weeks' time, an oil and gas sector focus on Wednesday, June the 19th. But I look forward to seeing Sara in person next Thursday, the Small Cap Awards.
Looking forward to it.
Yes, and I have absolutely, I'm glad I'm not on the judging panel. Thank you very much indeed. Thanks for joining us. Take care.
Thank you very much.